Yes, sir. We're going to talk Snapchat for the trade of the day. If stock's down 38% on earnings after failing to give guidance, then certainly this is going to be something we can learn something from. Now, I'm not going to tell you that I had a monster winner on Snapchat today. I'm not even going to be able to tell you that I had a great short on Snapchat today. But the only way that I was able to get away from this unscathed and be at least slightly up was by accepting the reality of the situation at the open. Now, if there's one thing that we've talked about when it's these beat up names, and when I'm using the daily chart here to show you guys what beat up means. Snapchat, last time they had their earnings, they actually guided poorly and they reduced guidance going into it and then missed, and it was down like 30-something%. Today, you are already crushed. And then you are breaking these lows when they fail to guide. Like you had this last ditch level of support at $12 and breaking down. Now, if I've seen it in Robinhood and I've seen it in a lot of these other ones that have gapped and made that press to the downside, I even coined a saying for the last quarter and a half. And that was, if it doesn't break the low, there's only one place to go. So at the open today, or at least, sorry, in the pre-market today, I should say, because it was before the open, you saw it take out the low at 11. I get into the short, and if you're watching the live show, you'd heard me say, if this doesn't follow through, I don't want to get trapped at the bottom. Now, this is a mixed decision here, because if you look at what ended up happening, yeah, I would have had to risk back into this range here, but getting out essentially flat for a few pennies worth of a loss was a misstep, because we could have taken that nice scalp trade pretty clean, only going against you 5 pennies to maybe make 2 to 3 to 1 down to like an 85 print. Wasn't really hunting for that. At that point, I feel like this should be doing that, or I don't want it because you're going to get trapped, because this is what I thought was going to be the boom into 1150. In my inclination, given what had happened in Robinhood and some of the other stocks that I'd seen, if we were going to have that failed break, and then going into the open, we were going to reverse, I wanted that long and then punch it up. I ended up taking only half out. Like sometimes that's a really good trade, but trust me, I was still holding on to half the position to get the next move up from that 11 break, getting out in front of 1110, 1120s or so, and then looking for that punch up to 1150. Now, I wasn't expecting it like Robinhood did on its day after earnings to halt to the upside. Different levels of short interest. Snapchat not that heavily shorted. Robinhood was, but I was expecting a push up after that fail. Instead, it just instantly breaks. I'm out in front of that last breakout. We're exactly the same level we're taking it off of. 11s and 1095 was the price area the entire time. So I adhere to my stop. I limit the downside loss, but I have no reversal short. And I don't think I'm ever going to get short there. But if there's a lesson to be learned about it, it's that this right here is your opportunity to get into the trade. If I like that $11 level, then when we come back up, retest the pre-market low and establish that, you've got to be thinking short. And the reason why you're thinking that is, well, it didn't do the jailbreak. It didn't break the backs at the open of the shorters, and we are below that resistance level. Now, once you've missed out on that entire trade, here's the advantage of being a prop trader and having direct market access. Because it came to $10. You're going to see all this activity at $10. Monster bid at $10. The stock is short sell restricted, meaning you can only remove liquidity off the bid to take a short position if there is an uptick. That makes it very difficult if there's a very large order on the bid at $10 for that to get taken out without people that are long punching out. So in this particular case, it was as simple as going long ones and then scalping for everything that you can. And as a matter of fact, there was somebody, and kudos to them, I saw them take a huge EdgeX order, just 1s to 3s, just threw it on the book and took 2 cents. I was essentially scalping all the way up. We got some 10s. It was 1 to 5s and then 1s to 10s a couple of times there. When it did a wick off bottom, we jumped back in a couple of times and did the same thing. But it really isn't giving you much more than 5 or 10 cents. That's how weak it is. So it's embarrassing to be able to say that, of all people, I didn't really have the short here today in Snapchat, but I was at least willing to be patient and then flip to more of a gimmick trade, just going long off that 10 level. Sometimes you take the trade that's going to be there for you. And other times, you have to just sit there and accept the fact that you've missed the move and all you can do is learn from it. And I know exactly where and how and why I should have had the short position. There's no question. This is where I want to be short. That's the one mistake that was made. I don't mind losing here. I don't mind getting long here. I don't mind stopping out there. But that's exactly where I should have been getting short. Take that setup all the time. As always, this is brought to you by Day Trade the World. Start your day trading career with Day Trade the World. Get the capital you require to put on trades just like this. And always, learn from your mistakes and be better every single day.